What's going on, guys? Bryant here. Today's Tuesday, November 29th, 2022, and the market is closed. Now, over the past few days, I've had a lot of one-on-ones with quite a few different styles of traders, and it's kind of sparked the desire, I guess you can say, to put out a video. I was going to do one just for the QTA Gold members, but I figured I'd just do a video, kind of freestyle it, and publish it on YouTube for everyone else to check out also. Kind of piecing a lot of things together, mostly on the gamma exposure, but also in confluence with volume profile and things like that. So what we're looking at is the SPY, and if we just jump into the intraday price action, we can see this on our chart right here. The levels on the chart that you guys are seeing, if you're viewing this on YouTube and you're not a gold member, for quant trading app, these are just some of the levels that are generated from the algos. The colored levels are from the options chain, comprised of mostly the gamma exposure, and the blue level right here is max pain. So this is the highest negative gamma strike, this is the highest positive gamma strike for the Friday expiration, because that's the most recent expiration that has the most amount of influence on the markets currently. That's just the way gamma works. And then we have the absolute gamma strike right here of 400. The gray shaded areas are by statistical probabilities, and then we have the weekly buy and sell zones right here. So again, everything that you see on the chart is just generated from the algo. So if I were to just turn these off right here, this is a clean chart. And then we're just looking at these levels generated from quant trading app. And then we have this muted gray level in the background here is VWAP, the standard VWAP indicator that's built into any platform. So yesterday, if you guys are in QTA, you know, within my notes, I kind of posted a few excerpts or something whenever I have any type of thoughts or something that I think is pretty significant or important that's likely to help you guys formulate some sort of trades. I posted this to kind of start the week. This was about 45 minutes or so after the market opened. I was kind of outlining the way the gamma profile looked. So if we zoom into this and just make it a little bit larger, here it is open up in a browser tab, and we can see what I was trying to highlight is, first and foremost, this is one tip I guess you guys should do. You guys already know every Friday I like to build out a GEX profile for the upcoming week, and I will exclude the Friday expiration and just look at the following week's expiration and kind of see if there's anything that stands out. For this particular week, it was now Monday. I built out this profile so we can see this is 35 minutes after the market opened. I want to pay attention to where is the highest positive gamma strike and the highest negative gamma strike, and then I kind of think of that as a framework for where price is likely to be. What's also significant is to take note of where is the absolute gamma strike, and then where is there a lot of high open interest on the call and put side, as well as the combination of calls and puts. So I was just pointing out to you guys, we can see that there's a lot of things that lined up for 400, as we can see right here, all these marks. On top of that, we can see that this is a very tight range for the SPY. It's only about from the current spot price, which was around 400, we can see it's 399 and 91 cents, so pretty much 400. If the market was to go up to what we refer to as P1, which is the highest positive gamma strike, it's only about a 0.71% increase, and if the market was to go down, it's only about a negative half a point% before the market would hit the highest negative strike. So this can be seen as a framework or a box for what price would likely be around. And then we know the market has been pretty choppy over the past few days because we have the next big catalyst tomorrow, I think at 1:30 p.m. Eastern time. Fed Chairman Powell is expected to talk, and then we have on December 16th the next FOMC announcement. So the market is kind of gearing up for the next big move. But for this week, we're going to build out a profile, and that's usually how I want to start, so just be aware of these. Now, you already have these levels on your chart here, but how you can use them to build out some sort of trading plan is something that I lined out here. So if I'm just going to just speak out what I've written here, just so for myself also, I don't even remember when I typed this out. As I said, I'm just kind of doing this video on the fly, but the SPY's GEX profile for this week is currently very tightly concentrated around 400. Not only is 400 absolute GEX, but it's also the highest open interest along with the highest call and put open interest as we just looked at. So 403 is P1, so that's the highest positive gamma strike, and 398 is N1, making it a very tight profile. So that's, again, just reiterating what we just looked at. So just showing you guys this. If you're watching this video in the future, instead of over explaining myself every single time, I'm just going to come up with some sort of visual language so that everyone can kind of understand, and then we just keep it moving from there. That way I don't have to type it out every time. So on top of that, 403 just about aligns with last week's high. So if we look at it on the chart, 403 is just about lining with last week's high. So that's also adding a visual reference for anyone that's not using gamma exposure, because we know when there's a lot of confluences, it means that there's a lot of different styles of traders all having the same things pointing towards the same indicator. indication. So in this words, if you're just using simple, support and resistance, and you're just using technical analysis, and you draw out a level last week, you're going to tell yourself, oh, 403 is likely to be resistance. If we look at the daily time frame, we already know that there's a larger trend line on the daily time frame here, lining up something like this. So there's always going to be some sort of idea that the 200-day moving average is also up there. So it's currently at 404. So multiple traders are already looking at this as a potential place to short the S&P 500. If we jump back to the daily time frame, that's 403. So that's what I'm pointing out. On top of that, we can see that last week's high, and 498 is max pain for Friday. So yesterday, this blue level, which today moved down to 397. If we actually take a look, that happened overnight. So we get an indication, when the max pain changes. So we can see last night it was 398, and then when we wake up, in the morning, we get a notification saying that it drops down to 397. So that's some sort of an indication. Also, whenever we see the max pain dropping or increasing, the same thing whenever we see these gamma levels dropping or increasing, that's usually an indication also. So say, for example, if overnight we see that the absolute GEX drops, and then we also see that the max pain drops, and then we see that the highest positive gamma drops, those are all bad signs for bulls, because we don't want all of these things dropping. All those things should rise if we think price is also going to go higher. So if you didn't know, I'm just mentioning that to you guys now. I don't believe I've mentioned that in a previous video before. So I'm going to draw out on this chart here 398, and let's just plot that, because again, the max pain has dropped, and I'm going to make this a little bit less of a blue, a little bit muted. Press OK, and now we have 398 right there. And then let's also just duplicate this for a second, and then draw this, move it all the way up here to 404.03, and then let's just make that white for now, so we separate that. So here was our max pain, here was the high P1 for yesterday, and then we already had our N1 strike. And let's go back to the notes for a second, and we have let's scroll up, we have on top of that, blah, blah, blah. So a break and retest of either 403 or 398 will likely lead to cleaner price action with follow through. But as long as the SPY is less than 1% away from 400, it looks like it will be hard for it to stay away and likely to be choppy around it. So what I'm implying by that, guys, is if you see levels that are this tight, if a level breaks, which is what happened yesterday, the market sold off a little bit, and we hit the max pain strike, which was visible on our charts, price bounced, and then we broke below it. Now we can see a little bit of consolidation. So for all of you day traders that are looking for some sort of intraday pattern, some sort of technical analysis, and that's what you're basing your decision on, here it goes right here. We have a break of a key level, and then what do we get right after? We get much cleaner price action, because that's what's expected to happen. There isn't really much structure between here and the next key level on the volume profile, or the GEX profile, or any other major structural level. Price will just keep falling until it hits that, and that happened to be around the 395 level. We didn't quite hit 395. If you guys know, we did have, if we jump to the volume profile, the level at which I was looking at, we had these two virgin points of controls right here, just below 395, and that's something that was discussed. I was saying I would grab some cheap calls, expecting some sort of push back up to at least 400. It didn't end up being the rally or the big one, so it was just a little small trade here, but nonetheless, it was a trade that worked out. And so if I post something like that in the notes, or again, you're using your own analysis or your own tools, you have access to analyze this on your own, being able to composite an idea or a trade plan before it happens is pivotal, because it allows you to prepare for it. So in other words, again, the break of 398 means you can go with a 398 put, you can go with, you can sell some calls, however your trading style, you call credit spread, maybe an out the money put butterfly, maybe an out the money put calendar, or maybe just some naked puts. The at the money, maybe go with the 390 put if it's out the money, 2 weeks out, 0 DTE if you're going with the Friday expirations. There's so many different ways to trade. Maybe just short the equity, short the SPY itself, or go short the ES futures contracts. There's so many ways to use the same information. Every trader has their own different style, including myself included. Some days I will just grab the naked put, other days I will short the MES, a few contracts if I want to scale in. If I don't want to scale, I'll just go with the big ES contracts and just grab one, tops two, because this is a large move. move for the ES here for at least for my style or my size of day trading. I don't like to put too much risk on intraday trades, but at the end of the day, it's just a plan. So that's why I'm just trying to outline it for you guys to be aware of. This is what I'm seeing and this is what I'm thinking here, and then just showing a view what it looks like so we can see how high the absolute GEX is around the 400 level, and then we can see it just tapers off very nicely until we get down to this 395 level, which is likely why price is likely to be a lot smoother. Once it breaks this 398, it's likely to be a little bit smoother down until the next key level, which was the 395 strike. So this is why I'm sharing this also. On top of that, what was important though is that I said when you include the December 16th expiration, which is the last monthly expiration of the year and a couple days after the next FOMC announcement, we can see the probable hedging as 390 becomes N1. So 390 becomes the highest negative gamma strike right down here. So the first picture, we could see the highest negative gamma strike is 398. However, when we include this expiration, which is a big one, which is why I circled it here, we can see that with this profile, this is showing that this is 40%. Over 40% of all the gamma exposure is in this expiration. If we check out the site right now, just to show you guys, so this is an aggregation of all of the current GEX profile. I just generated this right before I started recording this video, and we can see what stands out right here is December 16th. That's 25% of all the gamma exposure. So we have this profile, but sometimes we need to tailor it down a little bit more because we're not interested in leaps and stuff like that. You know, we're trying to just build out a trade for ourselves, maybe for a day trade or just for a few days. So then this is another example. So this is the same profile that I shared here, but this time, again, this is populated right before I started recording this video, just excluding today's expiration because the market is closed, as I mentioned before. So it's pointless looking at the gamma exposure for today. And now we have tomorrow's expiration, we have Thursday, and then we have Friday, and then including the December. And we can see that the December expiration has a lot of premium, a lot of value in it, a lot of open interest, all that stuff. So once we include that, we get a little bit more of a different look on how things are looking for the next couple weeks here. And again, the FOMC announcement, I believe it's on this day. So the hedging would make sense that people would be purchasing 390 puts and all the way down to the 380 puts for protection because implied volatility has been very low. The VIX has dropped below 21. We haven't seen that for a couple months or so. And it's a good time to, in a sense, hedge your portfolios, and that's what we're seeing with all of this. And most of that hedging is taking place for this expiration here. As we come down, we can also see how large it is. The gamma exposure, the way I've mentioned it before, is to think of it this way. It's almost like looking at something in 3D. When you look at your chart, you're seeing 2D right here. So we know 390 is a strong level. We know, 397 is a strong level. We know 400 is a strong level, but how strong is it? Let's look at it, with X-ray vision. Let's look at it in a three-dimensional form, and we can see the depth of it, and that's the intent behind looking at this. This is very strong, and on top of that, we can see a little bit positive GEX. So this is just going to help reinforce this level right here. That's just the way, the structure of how all of this works, and that's what I highlighted then here. So I said for the December 16th expiration, which is likely blah, 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 next FOMC, blah, 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 we can see that 390 becomes N1 and 380 has the highest put OI. I picked up some puts for protection using 385 for December 16th. Some out the money put butterflies, broken wing put butterflies, or put diagonals are good ways to go about being short delta without dealing with too much time decay. So this happens to me. If you guys know my trading style or been following, most of the videos in which I've posted, you guys know I rarely trade naked options. However, whenever the VIX is around 20 or below, I'm a lot more comfortable trading naked options. Otherwise, I'd rather trade spreads or trades the futures. But in this case here, I just want to say I got a little bit lucky because I grabbed these 385 puts here, and this was at 10.20 or so. So right around this time here, pretty much at this point, I was already anticipating. So here's 10.20. So right around here, just seeing, we're around VWAP here. I was seeing the rejection. And then at this point, I was like, I want to start getting the puts because I was already expecting this 398 level to break. So the entry for a day trader, could have been more so here because it was a pattern. When I entered this short, there wasn't really a technical setup or anything like that. I was just positioning for a longer term swing. But then I ended up getting lucky because not only did we sell off, but then we broke this level. We continued all the way down to 395. So it was amazing, obviously, to get, a move like that in one day. I think the puts that were all the way that expired on the 16th were already up 20%, if I remember correctly. And I had some 390 puts that were purchased from last week when we were over here, and those puts were the ones I was able to realize on this move, as I had mentioned in the gold chat. But again, as I always say, my trading or what I'm doing it should not really affect your thought process. I'm trying to share what I do or my thought process to hopefully help provide another perspective of what you might be thinking, or just to kind of bring awareness to something that can help you make a better trading decision. Because it's not about, I don't think you will really develop as a trader just copying and pasting another trader's trades. However, if another trader can share the thought process behind what they're seeing, what they're analyzing, what they're thinking, then that can help prepare you for the next time or the next trade, and then also create more self-sufficient, independent type of trader or thinker when it comes to analyzing the market. So it started off by analyzing this week's volume, a gamma profile, but then once I built the framework for this week, then I needed to know what influence would the big expiration have, in conjunction with the fact that the FOMC announcement is right around here. So I want to know what are big investors doing. Could have also probably included the 24th just to get an idea, but just because this one was just so large, I just wanted to keep it clean with just that one. And then pointing out that this is the positive GEX right here. So this is just also going to add a little bit extra support at the 390 level, and then saying a little positive GEX below it at 389 just reinforces the potential support of 390, because support and resistance levels we don't know until after the fact. That's something I learned. I think Brian Shannon is the one that's always repeats that. It's just potential support, it's potential resistance. We don't know until it hits the level and either bounces or gets rejected. So we're just anticipating 390 to be some sort of potential support, but it doesn't mean it's going to be support. So we can't say 390 is support until after the fact. So if 390 does not act as a good support over the next couple of weeks and we see the VIX rising, then I think it'd be safe to say the bear market could be setting up for its next leg down, and even strikes like 380 become within reach. If we jump back to the chart, hopefully that provides a little bit of context. And again, that's what I've been sharing mostly in the Brian's notes. I've kind of limited it now to the gamma profile, because I think this is the part that most traders, when you join Quant Trading app, need a little bit of help understanding, some of my notes. And then another little good tip here is, whenever I say the gamma profile looks healthy, this is what I'm referring to. So when the net notional delta, when this is all lighting up green, it's much easier for the SPY to move up versus a few months back here, when this is when things look pretty ugly. It's very difficult for the SPY to move up, and we can see there's almost no positive GEX in this profile in relation to just a little bit of time had passed here, and we can see some positive GEX started growing. This is when the SPY was at 387, and this is when it was at 393. So even though it was a little bit higher here, we can see this didn't really look healthy to me, and that's something I had posted in the chat. And then at this point I was saying the SPY, this is one of the healthiest we had seen, and that's when it's time to ease off the brakes and expecting, regardless of what the headlines are saying, I was not really expecting much selling for the time being. Again, until sentiment shifts. The major driving factors for the market this year have been the CPI reports, inflation, and the Fed FOMC announcements. What are the Feds going to do to tackle inflation? So knowing those are obviously things that will shift the direction or set the next trend for the market. Lastly, if we just switch on let's take a look at the volume profile for a second. So I just did a one-on-one, and that also inspired. It was exclusive just to the volume profile, and I haven't done just the volume profile one-on-one in a while. But on that Zoom call, I kind of broke down, the thought process, and I have an entire playlist available on YouTube to check that out, breaking down, the steps in which you want to start with. But right off the back, I'm looking for the most recent VPOC to act as likely support, and then you can see right here that coincides with this 390 level, and then a VPOC that coincides with likely to be the most highest resistance. Then you always want the current day's VPOC on your chart, and then you can include the zones around it. So there's a lot of high volume nodes around here, there's a lot of high volume nodes around here, and so forth, and you build out your profile. So this is essentially what that looks like. After we add these levels onto the chart, I'm going to remove this one because this I added after the fact, as I was just trying to emphasize how you can build onto it. So if you need any help with your volume profile, it's at the bare minimum, the most likely VPOC to act as support, most likely VPOC to act as resistance. The current day's VPOC, it does not need to be perfect. You don't need the exact penny, the exact cents. You're not trading with 10, 20, $50 million worth of equity that every penny matters. Even if you're scalping on a smaller time frame, it's not about the exact tick here, but being aware of this general area, this general idea of where these inflection points are likely to occur. Then I just have, for emphasis of when I was sharing it in the video, I just put a V in front of the value area high. That's what VAH stands for. So I just say a virgin value area high because price is not returned to this value area high. And then we have a value area low right here. And we were just walking through possible scenarios for tomorrow. But I want to, for not making this video entirely too long, it's a few things I want to point out why I do this. I'm not always also drawing this out on my chart. I can just look at the chart and be aware. Most of these numbers are burned into my mind. I trade mostly the SPX, the SPY, the ES, and the Russell 2000, and maybe just two other tickers like Tesla occasionally. If there's a proper setup there, maybe once a month another ticker. But for the most part, I can close my eyes and kind of regurgitate or say these levels that are key levels or high liquidity zones on the SPY. So drawing them out is good if you're a beginner and you're trying to build good muscle memory and good trading habits and so forth. But yesterday when the market was selling off again, I knew just below 395 there were a couple very powerful points of control here. On top of that, I also knew that there was a lot of gamma exposure at that level. So I didn't have a level drawn out on my chart saying like, oh, when the market gets here, I'm going to do this. Like, no, I was already prepared for when we get there. I'm going to look for some cheap calls, or I was going to enter in some sort of at the money call calendar or something else to benefit off of theta decay, expecting price to just chop around it for a little bit. But something I want to point out is if we take this here and let's move this over to yesterday, because assuming I recorded this webinar or this one-on-one yesterday, and we were to zoom in right here, we can say that this would have been at the end of the day the virgin point of control. If we fast forward to today now, let's jump to intraday. Let's turn that on, and then I'm going to clear out all of the studies, and we jump to here we have it. So the bell rings, and all we have on our charts now is just the stuff from the volume profile. The bell rings, we get a little bit of chop, and then the market is just bouncing around level. Then it looks like it's breaking out, it ends up getting rejected, and then we come back down. First of all, we'll talk about the 397 level once I turn on the QTA scripts. As we move right along, something to take note of is later in the day, look what happens. The SPY tries to reclaim this virgin point of control, but it's no longer virgin, obviously, because it touched it today, gets rejected, and then we continue to close below it. This is important because it's essentially setting the tone for the next day. So if we were to go back to here now, let's duplicate this, not duplicate it, but let's move this now down to today. This is a good gauge. If we close below this tomorrow, then we know who's still in control, aggressive sellers. If we close above it, then we know who's starting to regain control. It's aggressive bulls here. And the thought process would be, if we say, for example, gapped up over today's value area high, or if any point we're over today's value area high tomorrow, then let's just say the market comes back into this value area, retest it, and we see buyers are willing to defend it, we would almost expect the ES to head back up to the next highest liquidity zone, which would be around this area. So we can come up with a possible scenario that way. Being aware also, there's 4 different scenarios that can happen that I had walked through on that one-on-one, but again, I'm not going to go over all of them. I'm just showing you guys how you can use these little simple things here and carry it forward. On top of that, if we take a look at, if we were to jump back here, say for example, and we see, here's an example here of, we have value area here, we have a high point of control, then we have a value area within the previous day value area, point of control drops down, not significantly, then we have another value area that rises, and so does the POC rises. But then the next day the market gaps down. Not only does it gap down, but it gaps down below. If we were to draw a box over all of these value areas right here, it gaps down, and then the POC ends up being just slightly below these value areas here. That's a sign that it's saying that no one was willing to accept that this price, above this price, was value. So this is not a good value for the SPY for that day. No one was willing to bid it up and hold that bidding price. So that's a good indication that the next day we're probably heading to the next high liquidity area, which would be down here. And then we can see this is where people are saying this is a good value for the SPY. So we can see it ends up being in this zone, and then that it ends up taking off to the next high liquidity zone, or wherever the supply was outpacing the demand. So we have demand here, price pushes up, it comes back down to this demand, and then it pushes up again. Now we find ourselves in a state where, similar situation, this right here is our value area and then the point of control finished at the low of the day. Today, the value area was below yesterday's POC. The POC also went down. This is an indication. It would just make sense, logical sense, that we would just naturally head back down to somewhat in this area. Now Fed Powell is talking again tomorrow, as I mentioned before, at 1:30 p.m. Eastern time, I believe, and he's likely to say anything. So we have a catalyst that can, screw with technical analysis or what we think can happen. So we need to be aware of that. But at the end of the day, this looks like we're going lower. Other technical analysis traders might say, okay, we have some sort of a bear flag here for today, and if we gap down, we're likely to go lower. We can say, if we look at it from a bigger perspective, we can see some sort of bear pennants. It all depends. Again, there's so many different ways of dissecting, which is why I don't rely on just technical analysis. There's a lot more. I like to compound on it from a deeper perspective. But I'm just pointing out to you guys this. Now, what does that mean? Does that mean that the market must go to here tomorrow? No, it doesn't mean that. Something to take note of is if everything looks bearish and the market gaps up over this level, we're very likely to go higher, because you have to think about it this way. We're not the only ones, or you're not the only participant in the market. There's a lot of other people looking at this saying, oh, the value area dropped significantly. The POC dropped significantly. It's likely to go lower to the area of high liquidity if we were to break below these levels here tomorrow. So if tomorrow we're below 394, definitely 395, 394, and we're not holding, especially past 30 minutes after the market opens or so, and the market is just consolidating around here. If we see some sort of technical pattern form, then that just makes it easier. But we don't always get a technical pattern. By technical pattern, I mean something again like this. On a smaller time frame, we get a little pattern that forms like this, or we get some sort of pattern like this, let's just say on a smaller time frame here, and then we break down below it, and then we expect continuation. We don't always get that. Sometimes it's just a mess, or it's just chaotic, more so, especially on the SPY. So we might not get that, but if we do, we know what's likely to be the outcome. However, again, if we gap up over this level, we're likely to go higher, because there's so many people that are probably loaded up into short positions. And if people are shorting, the way they close their short positions, it means they need to buy back the underlying. If they purchase a bunch of puts, then they need to probably close out those puts because they're getting crushed. And if they're closing out those puts, that also causes the same effect for the markets to also sometimes push higher. So that's something to keep in mind. And I outlined that in a video on YouTube here, and it's a good one to watch. It's just the 2-day anchored VWAP and why does it work so well, or any video in which I've put out, I believe, on the 2-day anchored VWAP. That's just one that came to mind, but I would highly recommend that. So yeah, simple gap up day trading strategy. What's likely to happen tomorrow is the 2-day anchored VWAP will be probably flat tomorrow, so it's not going to be that significant, just based off a little bit of experience and my understanding of how a lot of this stuff is built. But let's just say the 2-day anchor VWAP was like up here, and the market gapped up and it was above here, and the first 15-minute candle tried to go lower, but then it ended up holding. Then we can almost expect us the SPY to go higher. And lastly, let's turn back on the studies, and now I'm just going to clean up all of the levels on the chart. We now know also, if we have this max pain, unless that's likely to change overnight, which we'll be notified about, we know if the market is over this 397 level, we can check the gamma profile and see if there's not much structure between here and here, then we're probably likely to go up to 400. And then we compound that with what we know also about how clean does the notional delta look like. So we can see that there's a ton of red. Now this isn't a ton, but relatively speaking, this is a lot of negative notional delta. Again, it's not about the exact number, and don't try to drive yourself crazy, because we're not machines calculating all this stuff. I keep this stuff simple. Obviously, as a developer, can build all this, read the material, understand it, but then once it comes time to trade, I'd rather put my focus on risk management, spreads I'm going to run. That's where I put more of my focus, as opposed to, oh, what's going on with this and why these numbers are changing here. No, if I see this just looks like it's not going to be a smooth pass up. However, if we get past 397, gamma kind of tapers off around here, so it might move a little bit faster between 397 to 400. So that means a potential opportunity for a scalp, because there's still a lot of call open interest there. This is still the absolute gamma strike. This is the total gamma flip level, and then we have the highest call open interest at 405 when we include this into the GEX profile, as I like to refer to it. And if we come back to the full profile, we can see also there's a lot of negative notional delta, but it's not as extreme as which we've seen. So the SPY can move through this, and then we can see the same thing over 397. It tapers off, so it's likely to move throughout this area pretty quickly, and then we can probably get a good scalp up to here. So the level to keep in mind, if I were to say this in the chat or something like that tomorrow, is 397, but you guys all have the same levels and all have the same access to everything, which I do within QTA, so you know 397 is the same level. If we get over 397, we're also clearing the value area high, we're over the point of control. So if we break over it and then we consolidate over it, we're likely to have some sort of a nice push up to this area here. And from the profile with the value areas, we see we have a value area high in this area right here. So 399, 400 ends up becoming the probable target. And that's just hopefully provide a little bit of insight. Again, I'm way behind on, there's so many videos, so many breakdowns of some trades that were posted. Most recently, there was a really good trade in Netflix. Again, there's been so much great learning opportunities this market is providing, and I just haven't had the time to fully articulate it all in the video format, and I still think that's the best way to really showcase this. So I'm hoping to catch up to some of the videos, and I'm hoping to catch up in putting out some more videos and stuff like that. And if I don't, then you guys will hear from me more next year. Just as I was wrapping up reviewing the video and I was about to export it, I just realized that I forgot this part in which I said we were going to take a look at the QTA levels here. And all I was referring to is just here we have the 2-day anchored VWAP, and then we have the max pain level, which is 397. So it was cool to see some of you guys within the chat were discussing 397. So let's just pull that up right here. And some of you guys were talking about the high open interest, and as well as the big block orders and stuff like that a little bit earlier, which was this 397 that I saw you guys discussing. And then, you know, I just came in and chimed in saying it's also max pain and a 2-day anchored VWAP, adding confluence to the level. So when you guys see confluences like that, obviously this becomes a great place to look to initiate a trade, because if you're seeing, you know, price pushing up and then it's forming some sort of pattern and then it fails, as long as we break back below, say for example here, or we break below VWAP, you can enter a short trade, because this is likely going to act as some sort of resistance. We already know the 2-day anchored VWAP has been a tremendous help for as long as I've been using it. It's been more than a couple years now in which this has been part of my trading system. But then when you start adding levels that come from the options chain, like the max pain or the high open interest levels, you guys can see right here how it interacts. And we see this on a daily basis, how important the max pain strike acts whenever price is around it. Sometimes it's pretty far from the current spot price, so it's not very relevant, but I know the max pain theory talks about, you know, that it might act as a magnet towards the end expiration, stuff like that. But I don't know if those people have had access to it as easy as we have, where we can see it on our charts every single day on multiple tickers, and we can see time and time again. Yesterday it was 398, and we see how that level ended up being the most important support level for yesterday. Once it cracked, price just sold right off to the nearest high liquidity zone. And then here we see today that it ended up bouncing, and then it was just acting as a clean resistance earlier in the day in confluence with the 2-day anchor VWAP. And then we got a really nice drop here. And that's just all I wanted to point out. The confluence, as well as whenever the 2-day anchor VWAP lines up with, say for example, like the absolute gamma strike or one of the quick QTA intraday zones, or when it lines up with weekly levels and so forth, it generally will lead to a really good setup or a really good trade. So keep that on watch, guys. Until then, enjoy the holidays, enjoy the time with the family, guys, and I hope you guys had a great year trading. Take care.